levels. Let's see how it goes.
Okay, we'll keep an eye out on that. And it's had a fairly decent run. I mean, in the last 1 month, the stock is up almost 15%. So looking pretty good over there. But let's move on and talk about how gas prices are expected to be revised from the 1st of April. The gas panel reports a key recommendation is for prices of natural gas to be between $4 to $6.50 per MMBTU. Harshvardhan Dole, who's the Vice President Institutional Equities at IIFL, joins us now to talk about that. Harshvardhan, thanks a lot for joining in. Can you tell us what could the impact be on gas producers once this revision, if and when this revision comes through? What kind of impact do you see on their earnings?
See, one should not look at just the near-term earnings for some of the gas producers for two reasons. Firstly, the current gas prices which are there in the spot market are significantly higher, and these are not sustainable. So even if these gas prices get reset to a lower price of say $6 to $6.50 per MMBTU, it will actually bring in some correction in the earnings, but it will also bring in stability over the medium to long term, because the price formula allows a reset of 50 cents per MMBTU periodically, and it has got an indexation to oil basket. So to that extent, it will bring in predictability over medium to long term. And that's what we actually like from producers as well as consumers perspective, that the largest suppliers will get stability, and the largest consumers will actually get uninterrupted supply at a reasonably predictable price. So it's a win-win for all.
In terms of changes, Harshvardhan, morning. Basically, there are two, right? One is that it'll be linked to oil and not international gas prices, right? So gas prices will be at a slight slope to underlying oil prices. And second is there is a floor, unlike before, right? These are the two main changes which are of relevance.
That's right. And of course, there is a priority which is being proposed to the city gas distribution companies, which in a way are single largest consumers, which are consuming at a most fastest pace. We all know that there is a gas capacity which also requires gas, but gas at a much cheaper price. And to that extent, CGDs are the largest asset class who are consuming gas in a meaningful way and who are projected to drive the overall consumption of gas. It is, and therefore, this a relatively lower or benign price environment ends up benefiting them the most.
Okay. So do you expect city gas companies to re-rate if the proposals, as is expect, no reason why they should not be approved, city gas companies to re-rate a little bit post this going through?
That's right. In fact, city gas distribution companies like IGL, MGL, or to matter even Gujarat Gas, when we speak to them, they are expecting, a benign gas price environment to further accelerate their, sales growth, particularly on the CGD side. And that's mainly because the differential between petrol and diesel versus CNG had narrowed down considerably over the last, 12 months, because the CNG prices had gone up anywhere between 36 and 40% across the country. And to that extent, any breather or any correction or cool down in the raw material prices will mean these companies pass on benefit to end consumers to a great extent. So the attractiveness of CNG to the alternative fuel improves, and that should benefit these companies quite materially. So logically, IGL, MGL should do well, and between these, definitely like IGL.
Okay, the other stock whose underperformance has been quite puzzling is Reliance Industries. I mean, there are, of course, reports suggesting that there seems to be no major catalyst in terms of a growth trigger for them. There's high capex as well, which could put pressure on the books, etc. But how are you positioned on Reliance now for the medium to long term?
See, in our opinion, Reliance, most of these concerns that, massive capex or volatility in the O2C business or deferment in ARPU increase in Geo, and some of the poor disclosures on the retail side, these more or less are priced in at the current market price. And we are, positioning this stock as one of the preferred stocks in the large and mega cap names. And to that extent, the risk reward seems to be quite favorable. And if one does back of the envelope calculation, then the implied valuation of retail business is probably 20 to 22 times on FY24 EBITDA, or implying a valuation which is at par with when Reliance raised money from various strategic investors. So to that extent, the valuations are far more reasonable now, and the underperformance should end once one gets clarity in terms of the tariff increases, particularly on the telecom side.
Okay, got that. In fact, let's take this discussion forward. Harsh, thanks a lot for joining in. Sonal is here to tell us what key brokerages are making of Reliance and the underperformance it's seen over the last many days. Sonal.
Well, yes, it's another report that we are getting for Reliance Industries in just last few days.